We have a few people coming in. We're just gonna leave 3 more minutes to get everyone settled in. But if you are here, we're doing a webinar today, the 7 deadly sins, financial sins of real estate agents, which I think is an amazing title because it got me intrigued. So hopefully our attendees today are just as intrigued as I am to learn more about this and what that entails.
Oh, absolutely. Yeah, it's one of those things where the 7 deadly sins tagline does pique your interest.
Yeah.
But there's a narrative flow to it, and it just kind of crescendos into something that hopefully is super relatable to everybody here. So we're excited as well.
Yes.
Everything Isaac said. I agree with you 100%. We are absolutely, we're excited. We're always excited to have the opportunity to share, different ideas, change the mindset how you look at your taxes, help you look at it and say, let me remove some of the stress. And most importantly is like, listen, there's ways you can actually make taxes not just an expense, but you can actually make it a savings, right? It's like, how can I make it profitable? Taxes don't have to be something that makes you scared at the end of the year, wondering how much you owe. I mean, there's something called a tax code for a reason. So let's get into it and talk about it.
I'm excited.
I like when people just kind of explains to me how taxes go, because to this point, I'm confused still, but it's nice to have backup support system, as I call it.
No, believe me, it's a bit outdated, let's say, and the IRS does not have a marketing team, so these sorts of conversations and ongoing conversations too are important. Because it's different if you're self-employed than if you're a W-2 worker, right?
Yeah.
Like I've had the benefit of working for Formation, so at this point I feel like I live and breathe tax consultation and financial best practices. But before this, honestly, like my W-2 jobs, I just ticked the box to auto enroll in 401k. I was just like, yeah, billing's got my taxes handled. I'll just get my W-2. Mm-hmm. But then I did a stint of self-employment for a little bit with my friend Sam. And I saw firsthand just how much goes into running a startup business. It's wild. And there's no just system built in to support those things that were so overlooked. So, but anyways, that's, the topic of today is just how to look at those systems, identify the 7 deadly sins, or just the most common things that people like to look for and analyze, and how that could shape your perspective and make it fun, make taxes fun.
I never thought I would hear that. Yeah, I never thought I would hear that tagline.
I guarantee this, you'll think taxes are fun by the end of this.
Let's make taxes fun. Okay, I like it.
We'll see how it goes.
Oh my goodness.
Perfect. I'm gonna go ahead and introduce today's webinar. You hear us talk here, and I want to make sure that you know who I'm speaking with today. Thank you, both of you, for being here today. A little bit of housekeeping items. We are going to record this webinar and we will send it to you via email with the email that you register. Make sure to use the chat for any questions that you have. Our panelists will be answering those questions throughout their presentation. We also are going to share their contact information via email. So if you have any questions afterwards, after you watch the presentation and you feel like you still need some questions answered, they're going to be there to assist you. There is not CE credit for this webinar. And please stay throughout the whole thing, because I assure you, you are going to get a lot of good information. Now, again, this is the 7 deadly financial sins of real estate agents. Today with us, we have Isaac. He is a business consultant at Formation in Washington. He's actively partnering with top producing solopreneurs who want to reduce financial stress and align themselves in the best possible tax structure. Now joining Isaac, we have Brian, who is also a business consultant in Formation, who constantly looks for the good in every situation, understanding it must create opportunities instead of solving problems. Those are pretty good bios. That gives you a little insight of these people and who they are. And I'm very, very grateful that you're here to join us for this webinar. And I will just pass the virtual floor to you guys.
Thank you
Thank you
so
much.
much. And we are grateful as well. Thank you for facilitating another session with Formations, and everybody for we're coming on a holiday weekend, and I'm sure taxes are the top of mind thing, coming into Memorial Day weekend. So we appreciate y'all, and we hope this is going to be engaging and fun. And so let's get into it. We have a screen share deck, so we're gonna go and share my screen here. I assume everybody sees the 7 deadly financial sins. So, we at the onset here, we understand that when it comes to taxes, taxes tend to be the, let's say, most strongly disliked part of being self-employed. And ask anybody, people don't necessarily enjoy taxes, right? Our goal is to make it engaging and shape a different perspective. So a quick agenda for today. We'll start with introduction. You've already met myself and Brian, but just really more so who we are and why we at Formations really partner with real estate professionals and what our ethos are. Like what have we learned from partnering with over 1,000 real estate professionals, right? And what goals and challenges, and how does this make sense, right? And then we'll go into the 7 deadly sins. We'll talk about 7 key perspectives and top of mind things that a lot of our solopreneur partners want to analyze and make sure they have a good grasp on, so that they can really run their business like a business. And then we'll try to pinpoint one specific one of the 7, and really shape a new perspective. And then we'll talk about how embracing tax strategy with that new perspective can save you thousands of dollars, and more importantly, get you more of your time back and lean into taxes. Like, no, don't brush it aside as a once a year thing. Really embrace it as something that's a built-in expense to your business. And then we'll introduce us, Q&A. Also, Q&A, we know that sometimes we'll pass through some slides. Brian and I, we speak to the stuff all the time, so we might just brush through something. If there's something that maybe you really want an answer on, just feel free to blow up the chat or the Q&A. We'll take some pause breaks and answer questions in real time. Otherwise, we've got some time at the end. So just another quick intro. Again, my name's Isaac. I'm a senior business consultant here, originally from Colorado. I live in Seattle. I'm actually currently physically in Indianapolis. I took a red-eye flight last night, so if I'm a little loopy, that explains it. But honestly, I'm feeling great. I'm super excited. When I'm not working with real estate professionals for tax guidance and support, I like playing guitar. I'm trying to learn Bohemian Rhapsody fingerstyle, and I'm also I'm into running. It's a new thing for me to get into long distance running. I'm trying to, build that stamina. So I'm also here with my compatriot Brian as well.
What are you running from?
Right? Towards.
You're running towards good health. Okay, that makes sense. Perspective. Thanks for changing that for me. My name is Brian. Thanks for joining, everybody. I am also a senior business consultant here at Formations. When Mary Angie was introducing us, I was thinking, wow, and then I realized she was reading the bio, and I was like, those are my words. It's true though, right? I'm not a problem solver. I believe in making opportunities and when I see them, jumping to them, right? Because if we look for problems to solve, guess what we're gonna find? We're gonna find problems. So I choose to look for opportunities. I'm obviously glass half full. I am a grandfather of 4 beautiful grandchildren, been married for a long time. And my focus when I'm not on the Peloton, because I don't believe in running outside, it's bad for your knees, right? I'm a stargazer. I'm that guy that will be out in the middle of our backyard. I live out in the country, and I'm literally just staring at Venus, right now Venus is in the Western Hemisphere, and I'm looking at Mars and trying to see the clouds moving on Venus. I'm just a sci-fi geek that way, so that's just who I am. But I also love helping people save on taxes.
There we go. On that note, Brian, I'm going to the Kurt Vonnegut Museum in Indy this weekend, so I'll get you some Tralfamadore swag. But
let's do it.
We are here to talk taxes and really just share some insights. So just a quick intro to the big concept of what we're doing here at Formations. So we come from the world of traditional tax and accounting. And one thing that our CEO and co-founders have noticed is that when it comes to working with small corporations versus independent contractors, there is such a striking difference between how those two are managed or structured at a system level, in that there is built-in PE and HR and all these systems for corporations where 1099 workers get nothing, like absolutely nothing, despite the Bureau of Labor Statistics predicting by 2026, the growth rate of self-employment will outpace the growth rate of traditional employment. There's no holistic solution. So what we're seeing is that too many people are stressed about taxes. They don't understand what's going on. Expense tracking is confusing and a waste of time. So we get that. We think that every solopreneur should have the focus and attention to enjoy what they do in life and not have to get bogged down by back office stuff, quite honestly. And so, I mean, Brian, I'm curious to know if that aligns with your daily conversations with with real estate professionals. And I'll go ahead and jump to the 7 deadly financial sins slide, and maybe we can just roll right into it from here.
Yeah, let's roll into it. I speak to agents and brokers every single day throughout the day. And during our conversations, I always hear them confusing their income with the profit. Because I'll ask a simple question. How much did you make last year? Most of you attending this webinar today could probably tell me within seconds, oh, I made 150,000 last year. Awesome, congratulations. But what did you actually bring home? What was your profit? Because yeah, you made 150,000, that's great, but what are you actually living off of? There's a huge difference between your income and your profit. Your GCI might be high, but your profit might be low. So we really want to make sure that our partners really understand the profit in their business, how to manage the cash flow to produce additional profit so they can increase their net worth, right? Number 2, prioritizing short-term gains over long-term success. I'm going to say this as nicely as possible, okay? Stop over-expensing the business. I understand what you're doing, and so does the IRS. We get it. The more you expense, the less you pay in taxes, right? You're lowering your tax liability because it's non-taxable income. But is it really setting you up for long-term success? The answer is absolutely not. If most agents get into real estate for 2 factors. One, they know and believed that they could earn more, and that's why they left their W-2 job. The second thing is, I want to create my own schedule. Here's a third fact that I know, and I hope you do as well. The real estate industry actually produces the most millionaires out of any industry, okay? So if you're focused on your net worth, increasing it to a point of those 7 figures, over-expensing the business will definitely short-side the goal. You will not be as profitable in your business. And most importantly, if you're going out to try to get a loan for your business, you're putting that business at risk. There are tax codes and strategies available for all of you today. It's available to you today that you can use to maintain that profit. And stop selling yourself short. Stop just going with the flow, that status quo. Too often, real estate agents and other business owners just file the taxes. What you should be looking for is, instead of filing your taxes, how can I do tax planning or tax management? There's a saying that goes like this, right? What gets managed gets measured. What gets measured produces the results we want to see. I'm on a diet, okay? I'm trying to lose some of this thickness. So I am measuring everything because I'm starting to manage what I eat, because I'm looking to produce those results. We want to make sure that you can create a nest egg of income available to you moving into the future, so you can not only support the goals that you have, but if any of you are parents, we also know we want to leave a legacy behind. Isaac, take it away. It's all yours.
No, I love that. I love the analogy to like anything. Like if you got a goal, if you want to lose some weight, or blow away the Peloton record for a 60-mile run, right, or ride, whatever it is. You got to get meticulous at a certain point. You got to get granular, right? And so you brought up something earlier. I think it was point number 2. You mentioned that real estate produces the most millionaires of any industry.
Correct.
You reminded me of that Gary Keller book, The Millionaire Real Estate Agent. And the point number 4 here of the 7 deadly sins is focusing on metrics that don't matter. There's so much noise out there. And that book, The Millionaire Real Estate Agent, talks about the 3 L's of top producing agents, which are leads, listings, and leverage. All of the metrics, all of the controllables should exist within that sphere, because there's just so much noise. There's social media, there's uncertainty in the real estate market. There will be ebbs and flows, things that are outside of our control, right? When it comes to your production and those atomic habits, if you read that book, right, just implementing those granular things and watching it compound into a successful system for yourself and routine and ritual, right, is really where you see the success start to manifest. So as far as the metrics that do matter, it's relative, like it's subjective, but the typical things we hear are appointment to listing conversions, right, leads, listings, leverage, right, getting the right leverage system to control operating expenses, right, like that. Another good book is Profit First. That's a great book for perspective on how to look at your profitability. And the gist of it is the traditional formula for profit is GCI minus expenses equals profit. That book has you shift your mindset to invert the formula and go GCI minus profit equals expenses. The point of that is you're really looking into which expenses matter most and categorizing which buckets of expenses are most meaningful or impactful to your business, right? Because at the end of the day, the main thing to measure is your profitability. Like, we're going to keep hammering this out, like just your profitability, predict how much you're making, predict how your business is growing and sustaining, and pivot and make decisions based on that understanding, right? Which leads us to point number 5. If you've got a good understanding of your profitability and how things are faring for your business, investing wisely towards your future is something that a lot of self-employed miss out on. In fact, Meredith Publishing, in 2021, they published results from a survey. They surveyed several thousand full-time self-employed and found that only two-thirds did not have any money saved for retirement. Only about a third had some sort of retirement vehicle, and that includes rollover 401k from a past W-2. So the lesson there is, there's no given system. Again, you don't have an HR team telling you to auto enroll in 401k and that they're going to match 6% to whatever you contribute, right? That's a luxury for W-2 workers. But that doesn't mean you're left out of those opportunities. If you've got some cash flow, if you understand your profitability and how much net cash flow you have sitting in the bank, collecting dust perhaps, turn that dead money into living money, right? Even at the current rate of return, at a 5% rate of return, if you start investing $6,000 a year into a pre-tax retirement plan at the age of 30, with a 5% rate of return, over the course of 35 years, by the time you hit 65, you will nearly have tripled your investment just through compounding interest. So those are the type of conversations we love to have. Obviously, it's relative. Sometimes it's a much better opportunity to use all of your cash flow to invest in like a fix and flip or a long-term rental, right? It depends, but just make sure your money is working for you rather than the other way around, right? Point number 6 is seasonality. There are peaks and troughs and ebbs and flows to every business, right? Like we here at Formations, we work in, we have to deal with this thing called tax season to get into. We don't believe should be a thing. But in real estate, just being mindful of, like, once you know your expenses and how they're being allocated, just pinpoint it. As far as timeliness, what's the right time to really lean into your sphere of influence, like newsletters, that sort of thing, or staging, like what's Zillow leads, whatever it may be, because weather impacts the supply and demand for housing, right? Holidays, of course, all that stuff. So just being really meticulous and really leaning into it and just being the CEO and looking at it from a 30,000 foot point of view is a super cool perspective. Last, but certainly not least, the financial sin number 7 is ignoring taxes because of tax seasonality. Now, I've been doing this over 3 years, and I've talked to thousands of agents and self-employed professionals at this point. And I can't tell you how many times people tell me that taxes are the biggest source of stress, and they did not expect to get hit with a $30,000-$40,000 tax bill. It came out of nowhere. Not only that, but penalties and interest and like what's going on. The fact that taxes are seen as a dark cloud that looms over your head for 4.5 months from January 1st to April 15th is a travesty. It should be addressed. It should not be the case. Now, to spin that, what we've been talking about is looking at your business analytics and just kind of the health of your business at a granular level, with the perspective of kind of like what could be optimized. Now, imagine looking at taxes through that same lens, seeing taxes not as something to push off until February or March of next year, but rather something that's impacting you today, right? It could be seen as a monthly expense. So we do have some slides. We're going to get into that and hopefully shape a bit of perspective on how taxes could be viewed as something not to be avoided for a later date and a lump sum, like tackling a mountain rather than molehills, but rather just smaller bite-sized chunks, little molehills. And then you can lean into it and really start seeing some significant savings. But Brian, I love your perspective on this. I'd love to hear from you as before we.
Yeah, tax season. It's a
tax
lie.
season.
It's a lie. It's a lie.
Lie, yeah.
It's a lie. Don't believe in it. The system calls it a tax season for a reason. They want you to think about it once a year, right? But we both know that the system is taxing you and I every single minute of every single day, right? As you mentioned, a lot of people brush it aside or they don't lean into it. Well, if the system is leaning into us as we sleep and dream about our vacation that we're about to take, right? And they're taxing me when I'm sleeping, my recommendation is to lean right back into them. If they're going to be on the offense, I need to stop playing defense. I'm going to go on the offense. I want to manage the largest expense in my business, which is your tax liability. But the least cool thing about this large expense in your business is it's invisible, right? Both Isaac and I know that I don't care how many balance sheets or profit and loss statements that you are looking at as a real estate agent to make data-driven decisions. What you never see on that balance sheet is going to be how much you owe in taxes, right? So if it's out of sight, it's probably out of mind. If it's out of mind, that means you're not managing it.
Our CEO, he'll do like a webinar and he'll ask the audience, like, what's your biggest weekly, monthly, biannually, and annual expense? And weekly, people got it down. It's like gas is like $90 a month, or leads, listings, that sort of stuff. Marketing,
$60,000 a year, $70,000 a year.
Yeah, for some people, if you got a good marketing system, roll with it. Of course, staging perhaps on a monthly basis, depending, could be like $1,000 or so. MLS, desk fees, these things that are just top of mind. And then it gets to the annual largest expense, and obviously we're talking taxes, so it's a trick question. But then people will say, yeah, $30,000 is a pretty big tax bill. So probably taxes. Then he'll reel it back and say, okay, well, if annually taxes are your biggest expense, why didn't you say that for monthly, weekly, right? So it's just a matter of perspective. But really treating taxes as a manageable monthly expense, I think, is super cool. So we do have presentations to go into specifics with different types of taxes, and the big two that we get hit with as working Americans with active income, but in particular self-employed get hit with, are federal income tax and self-employment tax, two completely different taxes. Now we're going to ignore the federal income tax for now and just really focus on the self-employment tax, because this is something that really is cool. If you treat it as a monthly expense, you can lean into a business structure that would really, really help decrease the amount of dollars that are going out of your bank account on a monthly basis for self-employment tax in particular. Now, quick refresher: the self-employment tax is a flat tax, meaning it doesn't change per percentage. It's 15.3%, and you're paying into Social Security and Medicare. right? That's what the 15.3% goes towards. Now, every working American pays into FICA, the Social Security Medicare system, but Brian and I were W-2 employees. We, in addition to the other perks we get for being W-2, get to split this tax down the middle with our employer. So I only pay 7.65% on my total income. Formations pays my other half. Now, if I just happen to be a 1099 independent contractor doing my same job, I'd be on the hook for the full 15.3% myself. That's just one of many reasons that's just the system is not treating self-employed fairly. Now, the thing is, the IRS understands this, and they've understood this since the 1950s. So we'll address how to take that step into mitigating the self-employment tax, overpaying self-employment tax in just a second. But really quickly, let's look at this from a monthly expense perspective. And we'll go off an example. If you're netting 120K, so this is after expenses, right? This is your taxable income. Then your self-employment tax expense, air quotes, right, is $1,500 roughly a month, every single month of the year, totaling around 18K. Now, could you, audience, imagine any expense that'd be worth $1,500? I mean, probably marketing to Brian. If it's really producing, right? If you're buying zip codes from Zillow, right? But is there anything that consistently just produces that much value that you would just ignore it entirely? Probably not. You'd probably be very, very granular and very about that expense, making sure it's absolutely producing for you. Same is true for taxes. Same is very true for self-employment tax. Now, I'm sure a lot of people here have heard about the S corporation, how it works. This is the answer. If you see the self-employment tax is something you want to mitigate, the IRS has an option for you to do that. Again, the IRS doesn't have a marketing team, so they're not sending out newsletters saying, hey, congrats on making 100K. Did you know you don't have to unnecessarily pay twice as much into this tax as a W-2 worker? Here's what you can do. But here's what you have available to you. If you're a licensed broker and have an LLC, or if you want to form an LLC, then once you have that LLC at the state level, you can elect for it to be taxed federally as an S Corp. Subchapter S of the IRS tax code is what's going on. That's the S in S Corp. And then your LLC transforms into the LLC taxed as an S Corp. And the entire purpose is to take the total self-employment tax that you're paying, again, at 120K, it's around 18,000, and shifting it into an S Corp level, which is closer to $7,000. Okay, that's great. That's like a big difference. But how do we get there? Conceptually, here's S Corp in a nutshell. Remember, you pay twice as much FICA as I do as a W-2 worker. The IRS understands this. They've understood it since the 1950s. That's why the S Corp has been around since the 1950s. The IRS is saying this essentially, hey, small business owner making, over 60K who wants to mitigate self-employment tax, you can do that. We allow you to do that. However, you have to play by our rules. You have to pay yourself a salary as if you're a corporation, and you're also you're the CEO of a corporation, but also simultaneously an employee of that corporation. So you have to use a payroll system to pay yourself a salary of a defined reasonable amount. And by doing that, then only the defined reasonable amount of your payroll is subject to that 15.3% tax. And that's it. Really, it's the tax savings of the S Corp is the difference in self-employment tax or FICA tax on your net income versus a defined salary portion of your net income, which in this example, assuming 40% is reasonable, could save you $11,000 that year. Or 100, looking at the 120K example, could save you $900 a month. So that's it's like a discount coupon to the IRS subscription you have, right? It's like a promo code.
That's awesome. That's awesome. Hey, do me a favor. Do not allow FICA tax on my profit. Okay.
Oh, yes. Questions.
Oh, do we have some? I'm sorry.
Oh, no, I thought that was a question, Brian.
Oh, no, I was really stating the fact that, at the end of the
yes.
day, yes, your business profits, we spoke on that earlier, income versus profit, right? The S corporation literally is saying, hey, your business profits won't be getting assessed with that 15.3% self-employment tax. It's kind of awesome. Well, it's not
Yeah.
kind of awesome. It's pretty awesome.
It's pretty rad.
Like, yeah, by all means, I do it.
Yeah. And just imagine what, like, so this is kind of a chart that shows what we've saved our clients from 2021. And you can see the top of the bell curve is if you're netting at or around 100 to 200K, that's the sweet spot. Beyond this, you can't save much more. The maximum you could probably possibly save with an S corp is 16K due to the nature of the FICA tax. But as long as you're netting around 50, 60K, it's worth a conversation. Like it could save you $6,000, $6-7 grand a year. Now, of course, it's not for everybody. It's something that really we'd recommend as long as you're seeing that consistency, right? As long as you're ticking the boxes on the 7 deadly sins, saying, got a handle on this. Now, perhaps it's time to lean into a business structure that's going to see me save, 10 grand year over year over year, over 5 years. That's 50 grand. That's a new down payment on a home, right? That alongside your retirement plan, like things are moving full force in a different direction. And that's, to Brian's point earlier. So just to kind of recap that, it's a fresh perspective that I love personally around taxes as a monthly expense that can be managed just with good systems, business structure, or help. And the ideal outcome is ideally, help you pay an appropriate amount of federal tax. We didn't get into federal tax, maybe next time, but prevent you from overpaying thousands of dollars a year in self-employment tax is a big one. And then last but not least, embrace taxes as an expense to be managed, right? Own it. Like you are self-employed, you're a solopreneur. There's no need to brush taxes aside and think of it as something scary. Like if you lean into it, you can really, it's kind of fun. I do this all the time. So maybe it's just fun for me, but I don't know.
It's fun. It's fun because it's crazy because at the end of this conversation that we're having with all of you today, it's a choice, right? That if you choose to overpay, it's like, I choose to overpay. You don't have to, don't overpay the IRS, keep it. But here at Formations, we are just super excited and we're dedicated to really help change the lives of our partners. I use that word partners. I don't use the word customers or clients just because it takes two to tango, right? We need you, and without you, we don't exist. We have just around 120 folks that are really focused on you. We are what they call a fintech or a tax tech team out here in Kirkland, Washington. And we have just over 1,000 partners. And I'd say 90% are probably in real estate, but we do work with other solopreneurs. And we are really focused on taking a very old industry, taxation, right? We're talking 6,000 BC Egypt old, right? And bringing it into 21st century with digital first solutions. And how we do that is it's a multi-layer of professionals here. We have a customer success team that really focuses on the day-to-day activities for our partners, making sure their books are aligned and every dollar is accounted for. But they're also helping strategize and answer questions throughout the year to our partners, obviously to make sure that they're not overexpensing their business or underexpensing their business. But we also have tax and accounting experts. A lot of times our partners need and we provide quarterly health reviews, not only with our customer success team, with our tax experts as well. And then our professional services. As Isaac mentioned, unfortunately, not a lot of people put money away for retirement. So our professional services team really focuses on those type of agents that really are looking into the future, and they want to provide that nest egg to make sure when they choose to stop working, their lifestyle doesn't change, except for you have more time. So that's a change, right? Our values, we put people, well, yeah, I mean, come on. If I was retired, my goodness. Our values, we'll put people first. Without you, we don't exist. Without you, we don't matter. So we have to put you first. We believe in making our own reality. As I mentioned earlier, and as Mary Angie mentioned, I believe in looking for opportunities, and so that's my reality. As long as I'm focused on the day-to-day activities of looking for opportunities to present to my partners and to make my wife happy, my family happy, I am producing that reality, and we believe that, and we talk about this almost probably daily here at Formations, and we're here for a reason, and the reason is to help real estate agents that want to sell as many homes as possible protect their commission, because we know the type of tax savings we align them with is literally almost like another transaction when it comes to like when you look at the dollars when it comes to commissions.
Yeah.
Right. So I'm sorry. Go ahead, Isaac. Do you have something to say?
No, I was going to say it's all about the system and the tracking and the visibility and the clarity. It's we did want to show how this works from a formations client perspective, but I do love posing this question to the audience. Like today, what is today? May 25th.
25th.
We're nearing halfway through the year. You know, we're experiencing market shifts. Some people are seeing consistency, others a lull, but you've had some transactions, right? Some business activity. With that business activity, question to the audience: how much tax do you owe today? Like if you were to go on sabbatical, how much tax would you owe today? I would assume the best guess is 20%, right? Profit first, put 20% aside. But what about pinpoint accuracy? So we did want to show a bit of, the formations platform demo. And Brian, I love the way you kind of explore this, but just imagine knowing with pinpoint accuracy how much taxes you owe, how much taxes you've withheld through payroll. Now this is my spoof account. So it's not accurate to what a real formations client would see. But just imagine knowing your outstanding balance for taxes. And then once you're flush, being able to look at your total profit and income and cash flow and make decisions through that sort of purview, right? So yeah, Brian, I'd love to just like hear what you hear your clients kind of relaying back to you as they grow into the formations experience and start to see this firsthand.
A lot of the agents and brokers that we have the opportunity to work for, they're really focused on their clients, right? And making sure they're taking care of the needs that their clients have and making sure that, they sell homes. What they don't want to do is focus on what's my cash flow? What does that look like at this moment in time of the year? Am I capturing my expenses correctly? As far as my income being tracked, where, people are moving in all these different directions when it should all be in one place. And that's exactly what the dashboard's focus is, to give you clarity and visibility in one place. So formations, to give you a day in the life of one of our partners, is that we're literally tracking the income and expenses real time. Okay. In that wages area, that's where your reasonable compensation would be, which is that reasonable salary if you were an S corporation. And then, of course, we want to make sure that you understand where how your cash is flowing, where it's at, and really make sure that you're not just hitting a valley and then a hill and then a valley and the hill, right? That's the lifestyle of agents, right? It's this. Our focus is to give you rolling green hills so you can maintain where you're not worried about being flush with cash or I don't have cash. We want to make sure that the cash is available, right? But agents are also letting me know, like, listen, do you know how busy I am throughout the day? I'm like, yes. They're like, I need reminders constantly. I need that tap on the shoulder. I need someone to reach out to me. Well, we always instruct for our partners to come into the dashboard at least twice a month, because we're going to provide you to-do list, right? It might be completing your payroll, or something that happens every single month, unknown transactions, or you might forget to submit your business miles. But as happens, like we'll use Best Buy or Amazon is where a lot of our customer success team sees where it's what they call the unknown transaction, right? Because we can't tell if it's personal or if it's business. So you can literally come right in, choose the category, and hit confirm, and it goes directly out of this unknown transaction portion right into the all transactions portion, right? But you're busy, right? What if you forget to do it? Well, we have fail safes, right? When it's time, because at the end of each month, we're going to reconcile everything so we can produce that profit and loss statement. Your team will reach out to you and say, hey, Brian, I'm not sure if you saw that to-do list, but there's 2 unknown transactions. Can we get that taken care of right now? So our team will reach out so we can reconcile, send out that P&L. But a lot of folks, right, is like, okay, yeah, I have profit and loss statements. Great, but what do you do with the information? What do you do with that data? How are you making data-driven decisions based on that profit and loss statement? Listen, We all have a toothbrush and toothpaste, all right? But if we're not using it every day, it gets a little chaotic, could get a little stinky. What we don't want is the decay of your business because you're not seeing the data and using it correctly in your business. So if you see in the top right-hand corner, there's a phone icon, right? Let's just say you had a question. Just schedule some time with one of our customer success teams. They'll jump on, answer your question, provide the insight based on what you're asking. If you're thinking about what are some of the things you hear, Isaac? Like, besides pay, I have a child that has 1 million followers on Instagram. I want them to get my social media account up and running as cool as that. Can I pay them? Right? We get that a lot. At least I do.
Oh, big time. Yeah, like including a spouse or a kid on payroll is great tax strategy, but does it apply? Like, get on a chat or reach out directly to your CSM. Yeah, though, I mean, anything under the sun. If you have a question about if it's ordinary or necessary to your business and you can expense it, reach out to the team. We'll answer that question for you. But more on a quarterly, biannual, annual basis, tagging up with one of the CPAs to say, hey, look, like I'm flush with the IRS as far as federal and self-employment or FICA tax, meaning I have $0 I owe and it's December. Wow. Okay. So now I'm looking at this $26,000 in cash flow. That means I have $26,000 to invest if I so choose. What's the difference between a traditional IRA and a SEP IRA or solo 401k? And what would that help? How could that impact my tax bill if I were to max one of those plans out? Maybe put 20 grand into a pre-tax plan, right? That you're at 150K. That means you're saving 24 cents on every dollar. If you put
That's awesome.
20 grand, and that saves you nearly 5 grand. So that's where you want to like get on the horn with someone from the tax team and say, hey, what can I do? What should I do? And then that's when the guidance and handholding really starts to move in some cool direction. So, but yeah, I mean, that's the thing though. It's like, it's all relative. Like there are some cool opportunities available for self-employed that we consistently advise on, but everybody's different. Like everybody's got different goals and different life circumstances. So it's worth the chat for anything, honestly. But yeah, so that's just a quick preview as far as the data. Obviously that was a spoof account, so it wasn't like it wasn't reflecting of anything realistic to anybody who's an S Corp client of ours. But I just conceptually, I like just seeing it in action, and Brian did a brilliant job just kind of like laying out what the real time scenario would be like for a client. But I think that brings us to the end of the presentation portion. I know we had some questions come in.
Yeah, I have one for you from Carolina. Is it Carolina? Yes, it is Carolina. If I am not a broker and my broker makes most of the marketing expenses, can I still save as an agent?
Absolutely. Yeah, absolutely. So as far as whatever comes out of your pocket for an expense, if it's ordinary and necessary, which can be interpreted in certain ways, right? Then there's a chance it could be deducted. Now, those deductions or those expenses and write-offs impact your federal income tax, right? It takes a gross income and whittles it down or shaves it down to a more reasonable net income or taxable income. But if your broker is already taking care of expenses, then that's a great broker. Like that's no need to over expense, right? Back to Brian's point, don't take advantage of short-term gains at the expense of long-term opportunities, right? You don't want to over expense and be in the pre-approval process for a loan and show a small amount of income when in reality your GCI is over 100K, right? So, but anyways, I hope that answers your question. Do we have any other questions?
We have, please explain paying yourself via payroll. Does it mean I have to set up a payroll system? Yes.
Yeah. Yes. Yeah. That's the thing. Oh, sorry, Brian, if you want to.
No, I was going to say is, the reasonable salary conversation is so important because if you go to the IRS site, they use that word reasonable. So there's really no true definition. Here at Formations, what we believe is reasonable is making it as low as possible to help you save in taxes, but also make it defensible to the IRS. right? So we literally have over 50 years of information available to us to help you set that reasonable salary. So if the IRS ever comes asking, why is this person paying themselves $38,000 a year? We have enough information and data to back up why and support to show why we chose for this to become that reasonable salary. And just a heads up, your reasonable salary, it's not meant to be a livable wage. It's really to help separate or bifurcate the income so that you're staying compliant with the IRS with that W-2 salary. And let me know, please, if I answered your question. If not, I can respin it.
And I would say it is required to use a payroll system. So if you're already doing estimated quarterly tax withholdings, then fantastic. The S Corp is not going to change your experience much. But you have to use a system like ADP. We use Gusto, a payroll provider, and excellent source of benefits for self-employed for our clients when we run payroll. But think of it as like a direct deposit. Like the IRS is saying, cool, you can make this S Corp election, and in exchange, you'll save a lot of money. But we need to see down payments on your tax bill throughout the year. And you need to use corporate systems and programs like a payroll company to withhold those deposits, right? Because it's just more administrative clarity and diligence.
And the IRS wants administrative clarity. That I can promise.
That's the trade-off, yeah, essentially.
Yeah, like when we look into your back office, it needs to be hygienically clean, because if it's not, we're going to spend a lot of time combing over something. And the number one goal, if that A word ever comes out and ends with a T, right? I don't even want to put it out into the universe. The lack of information available to them, the more time they're going to spend looking through and combing through your books, and the more time they spend is a greater opportunity for them to find something. But that's not a scare tactic, because S corporations are actually less likely to get audited. So another question from Nicholas. What is the best practice for calculating expenses? The best practice is doing it consistently. First thing I'm going to say. Are people saving all their receipts? What do you think about that one, Isaac? I mean, it's the 21st century.
Yeah, so digital is really helpful. We leverage program ourselves. We partner with Xero Accounting, so it's digital. Tracking all transactions and making sense of it. But yeah, digital. I mean, that's the answer. I mean, receipts for sure. Like if you're, some people pay for they do the vehicle use as an expense rather than mileage. So yeah, like your gas, your oil changes, your maintenance fee, depreciation stuff, like all that kind of. It's good to have receipts. It's very good to have receipts for that. But in general, like these programs, like the formations, QuickBooks, it's all digital. It's all meant to make sense of what's going on. So I'd say separate the business income first, get an LLC or have a separate business checking account, silo it, and then just get digital bookkeeping to help categorize and make sense.
Absolutely, cloud accounting. And he also wants to know, or reviewing their bank accounts year over year. I wouldn't recommend reviewing my bank accounts year over year. It's not enough attention, to be honest. This is something that requires your attention. If, as we mentioned earlier, if you're constantly getting taxed by the IRS every single minute of every single day, and if you're looking over your accounts, and I'm not sure if you're saying once a year, but you're saying year over year, what we're really recommending is that it needs to have attention at least 12 times a year. It needs to be visited, and the data needs to be analyzed so you can make data-driven decisions. Spreadsheet, question mark. It's not a bad thing, spreadsheets. It's just, it's, again, we're in a new world of technology with cloud accounting, and spreadsheets are really something that takes a lot of effort on your part. I'll put it that way.
Yeah.
Another question.
If it accurately captures everything that you can expense, like you have the option of not doing any of this too. It's just every dollar you capture is going to be 12 cents, 24, 32 cents you're saving on that dollar. to write off. So it's in your best interest to be as accurate as possible. And yeah, the cloud is there for you.
When paying, another question Nicholas has, Nicholas is on a roll. Another question: when paying yourself, are you just paying from one personal bank account to another personal bank account? That's a good question.
Yeah, I like that. It usually you pay from a business checking account with your LLC, but you can deposit the payment back into that business checking account or into a personal account. It doesn't matter where the payroll amount lands. Usually that kind of recycle is preferred, just because everything housed in the business account is preferred. Like, it's your, again, profitability. It's like laying eyes on your profits. But you can put it into any other business checking account. It's just the payroll system will have you determine the bank account to which your payroll amount will go to. But you can do it to the same one, different one, doesn't matter.
But yeah, you're definitely not your personal, from one personal account to another personal bank account. If I'm understanding that question correctly, you're gonna go from you can go from business, right, to personal. So if I'm here, are you asking, can I remove money from the account? Is that what you're asking, Nicholas?
Well, I think I got it. I think it's just could you? Yeah, I think, it's just like, could you transfer the money from one account to another, or does it have to exist in the same account? I would say typically if it's a business checking account with an EIN, that's the standard. Like, it's very having a personal checking account with an S corp, it just would make more sense to have a business account. But deposit it wherever, doesn't matter. Exactly. Yep. Loving this. Do we have any other questions, Brian? I saw.
Please explain paying yourself your payroll. Does this mean I have to set up a no? I'm sorry, we answered that already. I apologize.
Cool. Well, hopefully this was fun. I had a great time personally. And yeah, Mary Angie, thank you so much, and everybody.
Yes, thank you.
Having us on. If you want to scan that QR code, it'll schedule a meeting with Brian or myself. Usually the first conversation is a chat, just learn about you, but we can also loop in a tax manager for a comparative analysis. For all HER members, we offer a free tax review session. And as I say that, I'm seeing another chat. Oh, there we go. Sweet.
Perfect. Thank you so much.
Thank you
guys.
so much,
Yeah.
and thank you for the time.
Of course.
Absolutely. I put in the chat the book a meeting link. If you have any questions for them, book a meeting. I also included their contact information, their emails. They're very responsive, and they're here to help you in all the deadly sins that happen in real estate when it comes to financial, right?
Exactly.
Thank you everyone for being here today. I just want to go over some other house item keeping. Please make sure you save the date for June 14. We'll be back with another webinar, this time talking about affordable housing. And also June 28th, we're going to talk about navigating the real estate diversity and inclusion era, specifically talking about LGBTQ clients and how you can better serve them. If there's any other questions in the chat, I'll thank you guys again, Brian. I said it's been a pleasure working with you, and we hope to have you soon again.
Likewise.
Thank you again. It's been our pleasure.
And everybody have a safe weekend, a very long Memorial weekend, and we'll see you on June 14th. Thank you.